given the market has fallen so much, what could happen from here? This is the big question that everyone has. Should they be investing now? Could the market go back from here, or is there an even larger fall coming up?
Anybody who calls the current scenario bear market,
that is not correct. The chance for a V-shaped recovery, Nifty quickly going back up and creating an all-time high again, that seems to be very less, right?
Zomato's valuation is already 2 lakh crore and Swiggy's valuation is just 1 lakh crore. So will Swiggy outperform Zomato?
But the race started some 10 years before. Swiggy has been there, Zomato has been there, and if you look at it, Zomato has clearly won the race.
Is silver better than gold right now? Should I buy silver or should I buy gold?
Now the silver time has come. Silver has given 400% returns in the last 15-20 years.
As a long-term investor, doesn't make sense for me to put my money into silver for now. I'm looking forward to humanity solving for that as a problem, solving for economics there.
The bull run has ended, so you guys are just here because you can't make any more money from the market.
So another expiry has passed and the week has been rough. We thought that Nifty would actually take a bounce from the support levels, but it just kept on falling.
Yeah, Monday was giving some hopes, right? That Nifty would take support at 24,000 and move back. But Tuesday was really scary, right? That's where finally that support of 23,800 was taken out and Nifty giving good confirmation that it is planning to go down, and it did go down as well, right?
And 24,000 easily being crossed on the Tuesday and Wednesday also. We're seeing a huge fall and the market reaching 23,500 consolidating today.
And now the only hope is there is a 200 DMA at 23,500. So people are just crossing their fingers there and we just hope that market takes a support from there and bounces back.
Yesterday on Wednesday, it was beautiful to see Nifty day candle actually closing at the 200-day moving average. So great to see technical analysis being respected like that. But I think highlight of the week definitely has to be Bank Nifty going away, right? So, we did put out that reel as well. We did have that event in office as well. And I really want to, again, take some time out and talk about that. I mean, sweet memories, guys. Sweet memories trading Bank Nifty.
It is a lot of profits.
Absolutely, right? I mean, if you think about it, the very first weekly expiry to ever come out in the country of India, that's huge. Going away is monumental, historic.
I myself started... I directly jumped into option trading. I never did equity initially. That was a bad move. I agree. But again, I initially started with Bank Nifty, my trading capital, whatever I'm trading right now, was actually made by Bank Nifty. So seeing that gone away, the weekly expiry really hurts.
I know a lot of big institutional traders, big traders, huge traders who only trades Bank Nifty and world changing entirely for them and a lot of other traders. It's definitely a huge moment. We should take a pause or have a moment of silence for Bank Nifty, in fact. Yes,
I think that's where we can set what is the agenda for the show for our viewers here. So since this is the very first aftermarket podcast that we're hosting here, I'll tell you how it's going to be, right? So it's going to be a very casual, opinionated, conversational style podcast or just a few friends having conversations here in the table, right? Where you are the fourth listener and you can listen to what we have to say about the interesting market stories of the week. So we have 3 trending stories to discuss today. That's what I understand. Yes, so let's get started with the very first episode of the Aftermarket Podcast. I am Ajay. This is Nihal.
Hello, guys.
And this is Sharik, CEO and co-founder of MarketFeed.
Super excited, guys, doing this for the very first time. And I hope this becomes the start of something very interesting. Right? Where we can actually have fun doing this, right? At the end of a week, at the end of a weekly expiry series, we in the evening are coming out and having fun. And if we are actually able to deliver value, if your people are actually finding this useful and informational, then it's a win-win scenario. It's really fun.
Definitely.
Even I believe that during a conversation, there is a lot more value that comes out. So I hope users also find value with our conversation.
That's the plan. So let's get into the first story here.
So starting, given this week, I know we are supposed to talk interesting, trending stories about the market, but this week, given what's happening to Nifty, I think the most interesting story is Nifty falling itself, right?
So everyone is talking about that. No matter what news website you open, Twitter, everywhere it's just market
investors falling. Are terrified, in panic. What should we do with our portfolio? Should we sell it, not buy anymore? So maybe we should talk about that, and that's where I feel technically Nifty, we can say, is in a correction mode now. So it's said that any asset more than 10%. Any asset, if it falls by 10%, it's called, technically it's in a correction. And if it falls down by more than 20%, it's supposed to be in a bear market.
So anybody who calls the current scenario bear market,
That is not correct.
Technically,
As per this definition,
yeah.
we don't know who made this definition, but that's how
Yeah.
it is at least. But so that's what's happening in the market. It's fallen a lot from the all-time high. It's down by 10%. In
Yeah.
October, it was down 6%.
Yeah.
So when you look into it, right? I mean, in the last 10 years, there has only been some 5 or 6 months where Nifty has fallen down by more than 6%. So it's not like a very small event of sorts. I mean, market has moved down 6% in last 1 month alone and 10% from all-time high. So that's what is happening right now. What do you think? What do you think is happening? Because that's what people would love to know. Why is the market falling so much?
Yeah.
And what could happen from here? Is the market planning to go up, or would it fall even further down? So first, maybe let's discuss why is it even falling?
So there are certain 5 points why the market has fallen. These are very technical, fundamental reasons.
Maybe we can quickly go through them.
So we'll
Yes.
quickly go through them. The first one is, yes, FIA selling.
Right.
Other markets are looking more interesting.
I think we did a video about
We
that.
did
as
a
well.
video about that
Yeah, we
as
should
well.
put it up
Yeah,
here. Where
US and China, especially those markets have been performing really well. So a lot of money flowing back to those countries.
record
markets.
selling by FIIs in the market is what we can see. Lakhs of crores being
Lakhs of
sold
crores.
by FIIs.
Yes.
Yeah.
So there is also the fact that the about liquidity, right? So it's not just about the selling; it's about how fast they're selling.
Correct.
So they're
Yes.
trying to sell and exit so fast that the market is being dragged down. Even with DIAs pumping in a lot of money, we know that fact. Even last month was the highest ever SIP inflow in India.
It's nearly 25,000 crores per month now. So that's
so
crazy.
that's there. Then the normal mutual funds are there. But despite all of this, we saw the market moving back down. Despite DIAs
As you
buying
said,
the
I mean,
equal.
when the fall is quick, then there is more panic as well. So then a lot of retailers who probably are sitting on top of profits because they've been investing over the last 2 years and market has been on a good run. Now they're probably booking profits. Plus there is a panic and a lot of panic selling happening, and that's again triggering maybe like a stack of dominoes, again more fall happening there as well.
I mean, this is where even when I tell about retailers, supporting our markets, this is like a double-edged sword.
Yeah.
So if they are supporting the markets, they can even run away from the market in this panic scenarios, which we have to be aware
So
of.
it's very clear, and data says that a lot of people have come into the market post 2020, right? Post COVID crash and all. A lot of people have started coming, record number of demat accounts opening and stuff like that. And these people, they haven't kind of seen a lot of big falls, especially over the last 1.5 years. So they've only seen the good side of the market, and now when they're seeing bad side of market, like you said, a double-edged sword, and we really want to see how things are going to play out.
Absolutely.
So bringing it back to why the market fell. Again, FIA selling on one side, but on the other side, I also think that it's because of the earnings slowdown. That's what everyone is talking about. 50% of Nifty 50 companies coming out with lower than expected earnings in Q2. It's not losses. It's not even there is no profit growth. It is lower than expected profit growth.
It is just like people have higher expectations on you, and you just deliver what you have to deliver, and people are disappointed.
But that's the fundamental reason as well, right? I mean, people invest in stocks or companies expecting those companies to do well, and that's how the stock price is also supposed to move. I think that's a good fundamental reason as to why if stocks are performing bad.
But there are again reasons to it, right? For these companies to deliver lesser earnings. There has been a very less spending from government. Their expenditure has cut down, and they have only spent only 44% because there was election uncertainty. They don't know what new government will come, what new regulations will come, which industries they would support. There are so many things, and there is an intern budget that was produced, and then actual budget was produced. So there are so many reasons also attached to it, right?
So mostly due to the elections, we saw that not enough government funds flowing into the market, and I think that's the point number 3 here.
And speaking about funds flowing in, RBI also tightening its lending rules. Again, funds less flowing in the economy or flowing into companies.
I mean, it's in a good spirit, I would say. So what RBI is trying to do is control housing loans. They're trying to control P2P loans. They're also trying to control unsecured loans. So all these make sense for the long term. But all this coming together, especially when the market is having external pressure, I think it's pulling down the market by a lot.
So it's, what we are basically saying is FIA is selling, then government spending less on the economy as such, RBI tightening its rules, and then eventually company earnings also not as big as expected. So all these reasons are definitely good enough reasons for the market to fall. And like we said before, people getting panic and booking their profits, and technically also market sometimes require a correction. That's very natural for the market market to have. So I think these are real reasons why the market has fallen. So that's where the real question is coming. Given the market has fallen so much, what could happen from here? This is the big question that everyone has. Should they be investing now? Could the market go back from here? Or is there an even larger fall coming up? What do you think?
I mean, when I speak technically, like I've even established even in the beginning of the show, right? The markets are sitting comfortably on a 200 DMA. So people expect markets to take supports from such a long-term moving averages. So that is one ray of hope. But other than that, there are other things that we also have to consider, where probably RBI lowering the interest rate so that, there is some boost or some adrenaline that can be given to the markets.
So I think that makes sense. The RBI, US government has actually, or the US Fed has decreased their interest rate. India is long due for an interest rate cut of our own. And I think it's just a matter of time.
But again, when RBI cuts down the interest rates, the inflation shoots up is the concern that people always come up and say.
In theory, yes. So interest rate and inflation are inversely correlated. So whenever you can just picture it as whenever interest rate goes up, inflation comes under control and vice versa. So in the current case here, our Commerce Minister, Piyush Goyal, he has also come out and said, hey guys, you're looking at food inflation. I know onion prices have gone up because of monsoon or some other reasons, but don't take that as an entire reason why you decide a country's interest rate. So that's what he has come out and told. And he's a commerce minister. I'm sure he's feeling that pinch for the companies that he's answerable to.
That's true. So given all that, there are also points like, will FIAs come back, or are DAs enough to support this market? Will our domestic companies' earnings could better? Any thoughts there?
So once the government spending increases, it was a very temporary thing with the elections that came in. So once that ramps back up, if that is the reason everyone is really quoting, then I don't see any reason for the earnings not to move back up. So I think that's only logical. And mutual funds, there is still a lot of funds flowing into the market. SIP investment into the market is at an all-time high last month.
Right.
Yeah. So retailers still continuing to give the market that power.
So, when we talk about retailers and their SIPs flowing in, there is like what we addressed. It's a double-edged sword. So I think there is a lot for investors or retailers to actually see and learn from this bearish markets, which, what do you think, Sharik, should they point out and learn from it?
Yeah. So given we got this 10% correction, if anyone was sitting on cash expecting to, hey, when the market will fall, I'll invest, I think it is time to invest right now. There's no point in waiting more.
Yeah.
But when I also say that we should be investing now, doesn't mean that put all your money into the markets right now, but time to start investing, start accumulating, start buying your stocks or mutual funds or whatever. So that's my understanding. So, but I wouldn't have a strong opinion on, hey, market will definitely bounce back from here or will definitely fall a lot more from here. But one thing I'm kind of understanding from our discussion is that the chance for a V-shaped recovery, Nifty quickly going back up and creating an all-time high again, that seems to be very less, right? So
Makes sense.
Yeah. So otherwise, let's see technically where is market going from here. Maybe if it is even falling a bit more, maybe it could go to 22,000 levels and all again. Remember that crazy election day candle. So maybe those levels are where Nifty could go. We shouldn't be worried about that, but I think we should start buying stuff again. Yeah.
Absolutely. When all of this chaos is happening in the markets, there is actually one player who had that steel balls in them and, coming out with their IPO and, giving a good listing gains as well. And it is none other than Swiggy. Right?
Yeah.
And when we start this topic, there is a certain interest in market participants, where they are comparing and this famous war between Swiggy and Zomato, and people are fighting. Well, because Zomato has given them a multi-bagger returns, now people are actually, starting to analyze Swiggy. Will that become a next multi-bagger?
And both are like household names. So
Exactly,
in every tier 1 and tier 2 city, I'm sure everyone knows Zomato and Swiggy and have at least tried it once, right?
So there are multiple IPOs happening almost every week now.
Yes.
But nobody talks about all those small companies or even big companies for that matter, because those brands are not used by investors on a daily basis.
Yeah.
Because Swiggy is a company which we all probably use once a week at least.
Yep.
So, and it's the case with a lot of people, right? So that is another reason why it is in the limelight and people really want to talk about that, be a part of the company as an investor. So that's again why it is being discussed makes a lot of sense. Yeah.
So I think it has already created multi-bagger returns for Swiggy's employees.
Yeah,
You know, Bangalore real estate getting heated up. You saw the tweets, right?
Yeah,
Where
yeah,
people are saying,
absolutely.
if you are going to purchase any property, time to do it now.
correct,
Because the entire liquidity from Swiggy employees.
What is it? Hundreds or thousands of crore per this newly.
I
being
mean, why
created.
not like 500 crore patis being formed from Swiggy employees and over 5,000 other employees, another 9,000 crores being distributed with the other 5,000 employees. Then if so much of money is coming into the market, where would it be spent? Obviously on real estate.
Correct.
Right?
So that's where the question again is very relevant now that Swiggy employees with the ESOPs made crores of rupees. The question comes back to the investors thinking, hey, now that Swiggy is public, can we invest in Swiggy and get multi-bagger returns and become crorepati? So yeah, as you rightly asked, so that's the question here.
So what do you guys think?
Yeah, so my point being, Zomato has already done that. See, Zomato got listed and is already given more than 100% returns. Proud investor there. I already have my Zomato holdings at more than 100% return. So given that, I think Swiggy would also eventually give such good returns given the similar markets they are attacking and given the huge potential these companies have. So the multi-bagger returns are definitely going to happen is something that I believe, but I also feel that Zomato would eventually end up doing better than
So
Swiggy.
that is where I would like to ask a question. So now that you are still betting on Zomato, there is another narrative that is coming out saying that Zomato's valuation is already 2 lakh crore and Swiggy's valuation is just 1 lakh crore. So will Swiggy outperform Zomato?
Yeah, so speaking of valuations here, Swiggy is now valued at 1 lakh crore and Zomato is double that at 2 lakh crore. But they have earned it. They have proved their path to profitability. I mean, it's crazy to even think that even in the quick commerce business, they're progressing so fast compared to Zepto and even Instamart.
But again, this is where I would like to add, even though Swiggy is catching up, Zomato has already made profits and people are betting on Deepinder Goyal and how he runs the company.
Yeah, man, I mean, the way the man has built the company and grown the company is phenomenal. So if you look into it, see, they are not innovators, say. They started putting restaurant menus on the internet. That is what they were doing. And at the same time, Swiggy came out and said that food delivery has to be done in an amazing way where the delivery fleet has to be owned by the company. And that's how Swiggy started. And Zomato at that time, in fact, Deepinder Goyal went out and in public said that, hey,
he wrote a blog.
Yeah, he said that model is never going to work.
Oh.
But that is a place from where he came back.
Yeah.
From having such an opinion, he came back and is now the largest and the best food delivery company in the country.
I mean,
So
I feel
think
they'll start learning from others very quickly and adopt it and very efficiently.
Q-commerce for that matter, they had nothing. They had nothing, right? And then all of a sudden, they understood that the market demands them to have a Q-commerce vertical to win. They went out and acquired Blinkit. Right, so they did that, and off late we saw them acquiring Paytm Insider, and now they're building a business around that. So I think they're like really great in surviving. Their survival instincts are amazing, and the operational excellence with which they are doing is amazing. Another point I'll add on to top of all this is the fact that, see, if you look at Swiggy and Zomato obviously is making profits now, and they're making profits with similar revenue as that of Swiggy, having lesser advertising costs. So they're spending less on marketing, which I think is great efficiency, and which I also think is something great being done by Deepinder Goyal going out and creating a brand for himself.
I mean, him attending a lot of podcasts. I think Shark Tank also helped a lot in branding.
One interesting fact I heard recently is that he just took 1 weekend out of his life for Shark Tank shoot. He just took 2 days out. He went to Mumbai, shot multiple episodes. But think about the leverage there. 2 days, the kind of leverage he created, the kind of brand. I think
for the entire company.
Absolutely.
And also I remember a story where there was a very attention to detail when his pitch was happening. So one guy had only 9 numbers written on that, and he was like pointing out, and he was like the Ashneer Grover of the Shark Tank kind of a thing, where he given critical feedback, which is actually needed for startups also. And I think that is the same thing or vibe he carries in his office also, where he want to make it very efficient and better things going at his work.
With all this operational efficiency and amazing track record that they've shown. So my point being, so if you look into the Zomato versus Swiggy race, see, now we are being asked about the verdict of the race. But the race started some 10 years before. So Swiggy has been there, Zomato has been there, and if you look at it, Zomato has clearly won the race so far. So I'm betting on the winner so far, and I strongly believe that also Zomato going out with their QAP, they're planning to raise another 8,000 crore rupees. I feel Zomato is going to win as a company in the long term. So that's my strong opinion on that.
But I guess Ajay will disagree because
I would strongly disagree.
because Ajay keeps saying that Swiggy guys are innovators.
Yeah, it's like an
He probably gets better discounts. At Swiggy. Yeah.
It's like an underdog story. You know, HDFC Bank has created the market and they're the largest private bank. But you don't just go investing into HDFC Bank, right? You look for the underdog story. Who's the next upcoming major story? And I think it's in this case Swiggy, right? Because if you're looking at their revenues, they're very close. If you're looking at their profit projections, I think Swiggy is like 4 quarters behind Zomato, but they'll very soon catch up. That's what I
I'll
believe.
set some context here. Both companies have nearly 12,000 crores of revenue, and Zomato has slightly under 500 crores of profits, while Swiggy is 2,500 crores in loss. So
Yes.
I would say even some more catching up to do.
So their food delivery business has gone into EBITDA positive. They have some work to put on quick commerce where Blinkit is doing amazing. Instamart is still bleeding a lot of money. But again, everyone in the market expects that Swiggy is trailing Zomato by 4 to 6 quarters
But
to
again,
the profitability.
but again, this is where I want to bring in. We are just talking about these two duopolies here.
Yeah.
But when Zepto is coming up, they are raising a lot of money.
Crazy raising,
Big Basket is actually coming in, taking a lot of debt, and there would be some other players also chipping into this market. Then where do you think your duopoly will go?
So I have a understanding here. So Swiggy is a logistics company, but what you have seen them do is they are innovators at heart, right? I think you were trying to ask me that point earlier. So these innovators at heart, they'll keep finding newer and newer businesses to start.
Correct.
So
And Zomato will understand what is the best place to go, operate it better, and win there.
But this is where,
No,
right?
please continue.
So even
So-
though Swiggy are innovators, but at the end they're slow in making money. So do you think that will help?
So I'll tell you how this market is going to play out in the long term. So food delivery business has already matured.
Saturated.
It has already
To some extent, yeah.
It's not going to double every year. It'll grow 30-40%, great growth every year, amazing. Now quick commerce is that doubling cash cow right now. It's doubling, tripling in revenue every year, and that will also start leveling off at some point. But when that entire thing stops, right? When quick commerce stops being a thing, Big Basket, Zepto, they're all out, right? Zomato, at least they have the marketing prowess of Deepinder Goyal. They might catch on, but Swiggy, they are innovators. They'll come up with that 4th, 5th, 6th category, I believe, which could turn the market
But
around.
again, I feel like now Swiggy and Zomato are majorly, even in their quick commerce segment, are majorly available in tier 1 cities. And we've seen Amazon, Flipkart doing, disrupting market with one-day deliveries, which nobody needed. But again, they only were able to scale because they even penetrated to tier 2, 3, 4. So when I strongly believe, even if we start doing this quick commerce in tier 2, 3, 4, I think there is a lot of scope and potential to grow for these people. And I don't see that in next 5 years, the plateau is going to come, is what I believe.
So the shopping style itself of Indians is kind of shifting, right? I mean, people used to love e-commerce, and I personally I really don't want to wait for even one day to get my stuff. So there is a large shift happening from regular old traditional e-commerce. Now it's like old.
People used to ask, do you need that one-day delivery from Amazon?
Now it's like we really need it in even 10 minutes.
That's what
so
we want.
there is a huge shift happening from traditional e-commerce to quick commerce, which is basically increasing the market size of quick commerce by a lot. So that's my answer to your question being, so yes, there are multiple players. It's not going to be a duopoly. It could eventually be a duopoly. I don't know. But now we have multiple players having a lot of money. But the market, the larger pie which is up for the winner, that's also increasing.
Absolutely.
So Nihal, after hearing the entire context from Sharik and me, what do you think? Like, who's going to win this Swiggy versus Zomato race?
I feel both have equal chances, but Swiggy has a lot to catch up, and that is where the potential lies in. So I feel still Swiggy, investors can consider Swiggy as a diversification option. There are already investors in Zomato. Now people can start investing in Swiggy.
Absolutely. So since I have my money in Zomato, I would also very proudly put this out that I will be putting money into Swiggy as well. So yeah,
It's good for diversification.
It's good for diversification, and I think Swiggy has a higher upside, at least in the short term.
Yeah, long term, though I do not completely align to that. I align to me making money. So
But guys, we have to understand that both are really good companies.
Correct.
Both the founders are doing really well. And even we saw the meme or the poster that Zomato has posted with, Swiggy and Zomato having shoulders and, the NSE listing. I think it's
That's a clear sign of a duopoly. They're having fun. They're having fun with each other.
I don't want that duopoly. And so I hope new players come in and give us better opportunity.
I think that's where I'll take you to the story number 3. Again, I'm very much curious to understand or know about your opinions here, guys. So, a lot of people talking about investing in silver right now. Have you guys noticed it?
It's there everywhere. We see popular YouTubers doing videos on why you should be investing in the silver.
I mean, that narrative is coming because in the last 1 year, if you see, or specifically 7 to 8 months, silver has given 36% returns, whereas gold has under-delivered and it given only 30% returns.
Yeah, so I'll give you my problem statement here.
Yeah.
Does silver really have that higher potential as a long-term asset, and should you consider it in your portfolio?
Right. So see, technically, if you see, we see any professional person talking about creating a good portfolio of yourself, they'll mostly say that there should be gold in your portfolio. So gold is a precious metal, it's a commodity. So it all boils down to why even that. So why are even people saying that you should have gold in your portfolio? It is because historically it is said that gold will be a hedge to your equity in your portfolio, which means that if the equity is going up, gold could go up or gold could stay there. But if the equity market is going down, where your portfolio is bleeding, gold could go up. So that is normally seen. So that is where I'm just bringing some more context here. So that is where people say that when you're constructing a portfolio, have some gold in it. So now it is being discussed that you should also have silver in your portfolio, which I completely do not understand. So maybe we should talk about it.
But again, when we talk about gold acting as a hedge and all, right? So there is some biasness people are having right now is because Nifty is falling and gold is also falling. So then we're like, what is the concept of hedge?
I think I wanted to ask you that exact question. Usually, as per what you said, Nifty falls, crash, market crashes, gold should go up. But now Nifty is falling, gold is also falling. If gold is down by 8.5%, silver is also down. That's not the conversation, but just curious since you mentioned the hedge
so
there.
It is not like a rule written and made it into a law or something, like if equity goes down, gold has to go up. It's nothing like that. So it's just historically, if you see into data, that's something that you see. But this time also, it's again the narrative. I would say there's some amount of narrative control there. It's the Indian markets which are falling heavily now. Maybe we should have talked about this in the first story as well. Right? Indian markets are falling crazily. The global markets aren't.
The US market is already at all-time high with Trump elections coming in.
So the global markets are doing well, which means that I would say equity is doing well from an international standpoint, and gold has fallen. So again, not really matching to your narrative. Plus, I
just trying to understand.
I really want to establish the fact that it is not like if Nifty is going down, gold has to go up. Right? There's no pact or agreement signed between Nifty and gold.
That's like historical.
Historically, if you see, what are the big falls? We have your dot-com crash, 1919 to 2020. So Nifty was down a lot. Gold did move up. 2008 global recession. Nifty was down like huge, 40-50%. Gold was up 20%. COVID crash, Nifty down by 30-40%. Gold up by 10-20%. So historically, many times we have seen that. So that's where, again, coming back to the point being, portfolios, if there is a lot of equity, have some gold also, so that it could probably act as a hedge.
So let's wrap that hedge portion right there. That's not what I'm really interested about.
Should there be silver in your portfolio?
I think Sharik talked about gold and its pros in the portfolio. What do you think are the arguments for silver? Why are people, I don't know, a lot of videos, everything. Why is everyone talking about silver?
I mean, people like to back or, see only one-sided quote saying that silver has given 400% returns in the last 15-20 years. So they are like, okay, silver is giving amazing returns. And even in the last 1 year, it has given 36% returns. So that they are backing. And also one more very big reason that is coming out is the use of silver in actual manufacturing of solar panels or batteries or industrial usage of silver is really high. So
and it's keeping on going up.
And it's only keeping on increasing because of the demand. And actually, the demand is much higher than the supply in silver right now compared to gold. So that is why people are saying that the silver has more potential and can outperform than gold. So that is the biggest narrative that is we are seeing, and all the bullishness towards silver is coming from.
No, I understand the point you're making. Looking into the future, saying that the application of silver is probably increasing, right? But while you look into the past as well, like you said, silver is up 400%. Gold is up 800% in the last 20 years.
Same time frame.
In the same time frame.
Okay.
So while silver is up 400%, gold is up 800%, and overall it has given high returns. So your only point is, in the future, can silver go out and beat gold?
So you know what other counterparties argue is saying that now the silver time has come.
That's what everyone says. That's what I'm trying to understand.
That is because now what you said, was gold considered as a really good asset to hold or accumulate or act as a hedge. But now coming with new industrial applications and where silver is actively being used more than 60-65% today, whatever the silver is produced, 65% of is used in commercial usage.
There's a technical side to it.
Yeah,
right? So when it says that silver can be used in solar panels and renewable as an industry is supposed to explode and then silver's use gonna explode. So that's mostly because silver is a great conductor of electricity.
Absolutely.
And that's the reason why so there's this fact that copper is also a great conductor of electricity.
But copper oxidizes.
Yeah, copper oxidizes. That's the problem there. But copper could be polished with silver, or a new alloy could be created because silver obviously is costly. So I'm looking forward to humanity solving for that as a problem, solving for economics there, coming up with an alloy or doing some with copper, so that silver, a costly asset, need not be used for all these industrial applications. If that happens, that forward-looking, future-looking statement goes for a toss, and then it's gold again, right?
So but this is where again silver owners or pro-silver argue, saying that silver is majorly used in also like actively being used in manufacturing of jewelry. So whatever now till now whatever we see is 22 karat jewelry or 18 karat jewelry being famous right now, and with raising prices of silver and gold, people are not able to afford actually 22 karat gold or 18 karat gold, so they are moving down to 16 karat or even 9 karat for now. And now in a 9 karat jewelry that is being manufactured, gold jewelry, 40% of it is silver. So 40% is gold.
That is a point maybe I can slightly agree on or think about.
I mean, it's what I understand is Sharik's point was that if silver keeps going up really higher in value, will people consume silver the way they are doing now? Won't industries find other alloys, other metals?
Absolutely.
So that's exactly what's happening in gold here. Gold prices have been going up so much that people have found alternatives. 9 karat
mixing
gold.
with silver.
Mixing a lot. I mean, earlier also there was 18 karat and whatever. But now
increasing that ratio.
9 karat gold, where that ratio is crazy.
So silver might get some benefit from that, but again, gold has been a store of value. It's been looked at as a store of value, and that I don't think is going to change, right? Because going from gold to silver, I think that's a huge cultural shift. So even when the jewelry part, I agree, because they are still buying gold in their mind.
They are
Carat and all, people don't care. It looks like gold, and that. So otherwise, a cultural shift will not happen, even if it is jewelry or a store of value or countries or people or economies respecting that metal. The respect to be earned by silver, that's a cultural shift, and that culture has been formed over not decades, centuries, or even above that.
Gold is always first. If you win a medal, gold is always first, silver is second.
That cannot be changed.
And bronze is third.
Absolutely. But that is on people of pro-silver talking about all of this. But again, as a trader myself and being very active market participant, I usually try to bet on the volatility of silver.
That's true.
How volatile it moves and the beta of silver being very high. What is beta? It is again telling on the basics of index. So let us assume NIFTY is there and we are or let us assume a Bullion index. So Bullion index, let's say, has a beta value of 1 and silver has a beta value of 1.5. So if Bullion metal index moves up by 1%, silver can move up by 1.5% up. So if this goes down, the similar way.
So beta is a number which says that in reference to a benchmark, this will move how much? So in that case, silver is actually more volatile, and people tend to capture those moves and make a lot of money by trading that instrument. So that is one side of it. And the other part where investors are interested is because of the gold silver ratio that is coming up. So that is there is a ratio that people calculate based on silver price divided by gold price.
So that's what I actually want to know. Is silver better than gold right now? Should I buy silver or should I buy gold? I want that answer.
So this is where the gold silver ratio will ideally come in. There is a ratio which gold is divided by silver, and if the ratio comes out above 80, it means gold is overvalued and silver will catch up. And if the ratio is below 60, it tells that silver is now overvalued and gold will catch up.
Where is it now?
So currently the ratio stands at 80 to 83.
Which means that it is a good time to buy silver now.
Time to buy silver.
But as a trader, to catch that move.
Yes.
Not as a long-term investor.
Absolutely.
So when I hear beta is higher for silver compared to gold, which is 1.4. So if gold is moving up by 1%, silver could be up 1.4. Gold is down by 1. Silver could be down 1.4.
Absolutely.
Which means that silver is a more volatile asset. giving lesser returns than gold.
So it's moving down when gold is moving down, but it's not moving
so
up.
as a long-term investor, doesn't make sense for me to put my money into silver for now. But then if someone wants to bet on silver's use as an industrial applicant, then maybe someone could
So
bet
as a long-term bet, if you want to bet, I would still agree gold is a much better option because it will still act as a hedge and everything is there. But if you're a really active market participant and you really want to capture those moves, which is very tough, very experienced, let us leave it that to experienced guys, those will bet on silver is what.
Yeah, so Ajay, with all that is being discussed right here, right now, what do you think? Should someone invest their money into silver or gold?
So it's not even the same question. That's what I feel. Gold is still a great asset for long-term holding, and silver is a good tradable instrument. That's what I understood from the both of you. And in no way or form is silver going to be a direct replacement for gold in the next 5 years, 10 years, or even 50 years.
Right.
Silver has its industrial applications. Gold has its respect that people have given. Even if you win an Olympic first medal, it's always gold that you get, not silver. I think that will stay even for the next 50
even
years.
in our day-to-day usage, when we want to appreciate someone, I mean in Telugu I can speak that when you love someone, you'd say bangaram. So I hope in Malayalam also you would call something like if it's precious, you either call them diamond or you'll call them gold. Diamond is a different story altogether, but people have that emotional connect towards gold. So I think that will still stay and is a good investment option. So now that we've covered all of this, right? So we've covered markets crashing down, why it is, what should investors do, everything is done, and the hot trending topic of Swiggy and Zomato war, and then obviously the evergreen debate of silver versus gold coming in. But
and the largest story of the week, the very first episode of the
Aftermarket
Aftermarket Podcast.
Podcast here, guys.
So the podcast is here. So there are still a lot of concerns our audience are having. So even when we posted our trailer video, so there were few comments saying that, okay, now you guys have nothing to do, then you're doing this, or there are so much negativity, or there are two sides of people. So there are two thoughts running around. So maybe we can also give that context to users, okay, why are we even doing this? Why should we do this?
So the major comment that I saw, which got a lot of likes, again, I want to do this as a segment, by the way, where every week we'll talk about major comments in the previous episode.
So they can also probably be part of the podcast in some extent.
So guys, if you are wanting to involve in this discussion, comment down. A lot of comments has to come in.
So again, the major comment that I saw from last week is that the bull run has ended. So you guys are just here because you can't make any more money from the market. That point just doesn't make any sense to us, right, Sharik?
Yeah, we have always been trading options, like we said in the beginning, right? So this week also market is down 2% and we made 1% profit.
Absolutely.
So I've always been an options trader, and that's what even today MarketFeed as a product also we have option selling models which could make money irrespective of Nifty's direction. Nifty could be up 50% in a year. We try to make profits. We've done that. Even if Nifty is down 50% in a year, 70% in a year, we still try to make money. And we've done that in the past, right? So we have option selling models, and returns of these models are non-correlated to market. So there is no point that markets have fallen and we don't have anything to do. We're not making money and we are doing stuff for any ulterior motive.
These people should understand the context. So even though now that markets are falling, they are commenting this. Probably even if markets were all-time high or flat or doing whatever market is doing, we would still do this for them.
So what people have to understand is that we planned this podcast months ago.
Absolutely.
Not yesterday or not this
it
month.
takes a lot of people. We have 5-6 people just in this studio room, and then we have back-end people. So there is a lot of things that has to come together to produce something and deliver to you, because we always are obsessed in delivering value at the highest quality possible, right?
And there has also been a constant push from me and the company to this team, right? To make things better, to create better stuff for our audience. If not for our current audience, create more audience and reach more people and give more value. And as we rightly said in the intro video, the trailer video, the teaser video, right? So our mission is very clear to help people grow their wealth faster using the stock market. What can we do there has always been a constant question. And this is something that we are doing today. Months down the line, we might do something else. We might do a lot of different stuff. Just that we have to reach that.
And back of the mind, we always think about how better we can deliver value to our viewers. There is no any other alternative. It's give practical content, what we can teach them, how they can easily learn and understand. That is where even this conversation discussions are happening, right? So now that, in conversations, lot more things come out.
Right. Until the moment we think we are the right people to do it, right?
Yes.
Because again, it always goes around in this market. I mean, I really don't want to take names, but then so very popular used to be names used to like scam people, right? They never used to trade themselves, invest themselves, making loss by trading, and still coming out on YouTube and preaching and doing stuff. And it's completely understood if someone's coming down and commenting like that, because that's what they normally see. And that's where we always want to be legitimate. We want to put out our verified P&L if possible. We want to open our doors and show the kind of amazing stuff we are building at MarketFeed in terms of the quant-based, back-tested strategies that we are creating here at MarketFeed. So they are making profits. So till the time our assets are making profit, we are making profits in our account, we are doing well as investors and traders. I think we have all the right to come out and do this, right?
And when we are talking about having a lot of money in the market, it's not just your money or my money, entire company's money, plus your money, plus employees' money, it's coming up to nearly 15 CR.
Absolutely.
That's how much money we have actually put into our trading systems
and trading models.
And even I saw one comment, very interesting comment, saying that you have taken our money and your company is making money. So that also people got it very wrong, that we actually have to correct it. It's not like we haven't taken any money of yours. You are actually trading in your account, money is yours, everything is yours. That they have to actually understand.
Absolutely.
So I think it's just, again, narrative control here, guys. So it's 2 out of 100 comments, I would say.
That's what I want to also mention, right? I mean,
a
few comments like that, but thanks a lot to everyone else who looked forward to the first episode, who wished us, who welcomed me back to the channel. So thank you very much for being a support. And that's where I really want to say that, hey, this being the very first episode, even we are not really sure about what we are doing here, right? So we want you to give us feedback, tell us what you think about this. And this also, we don't think that this is one only format we are doing. So we really want to learn from you, understand what we are doing right, what we are doing bad, what is it that we should learn, and we are happy to change stuff, move ahead and make something which you really like. So that's the entire endeavor. So looking forward to seeing all of those in the comments section.
And even just before ending, right? So if anybody has any more doubts on MarketFeed or anything, there is a free video available on our website.
Absolutely.
They can just sign up, they can just come check everything. I mean, even we are also present on social media across multiple places. And even this video will go on Spotify. This video would be available on YouTube. So there are multiple ways where you can actually understand what we are doing here. So if anybody has any doubts, come to the website, watch there. If you have any more doubts on the content, come to our YouTube channels, pages, you'll get a context.
So I think it's time to wrap up the very first Aftermarket podcast. So leave the like if you like the show. Give us
historic that Bank Nifty is going away and we are coming in this week itself.
Exactly. Same week. And let us know any feedback or join in with our conversations in the comments down below. That's what we really want you to do as a fourth participant in this room here. And get subscribed if you want to watch more episodes like this. Yes, this is a market.
Please share. It's the very first episode.
And please come back next Friday.
Please.
This is a MarketFeed team signing off. See you all. Bye-bye.
Bye-bye.
Thank you, guys.